Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Monday, February 23rd, 2009. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. On this day in history, in 1954, mass inoculations of children in the United States with the Salk anti-polio vaccine began in Pittsburgh. Birthdays: Viktor Yushchenko, who is the Prime Minister of the Ukraine, is 55 years old. We have some breaking news coming in from Florida. Encompass Floridian Insurance Company, which is a member of the Allstate Insurance Group, is sending letters out today to policyholders informing them that the insurer is pulling out of the property insurance market in Florida. Encompass has a fairly small book in Florida, only 11,100 policies. There's been no reaction from the insurance department. As you know from previous reporting on this station, Allstate has already signaled their intention to pull out of Florida, so this perhaps is some cleanup or something else. We don't know yet much about the composition of the Encompass book, but we will find out more. Now to our main news. The American economic situation once again predominates. The President Obama, is giving a speech tomorrow evening, a State of the Union speech, in front of both houses of the American Congress. He's going to be talking about his economic plan. As it so happens, the National Governors Association, which is a group of all 50 governors of the 50 American states, is currently in Washington, D.C., having its annual meeting. President Obama hosted a black-tie dinner for them last night at the White House, and he repeated the message to them that he will put the nation's governors on notice, that he will, quote, call them out if they waste federal money. He also indicated to them that beginning Wednesday, the federal government is going to begin to distribute $15 billion in federal assistance to the states to help them cover the cost of Medicaid programs. Up until about an hour ago, the American stock market in New York had been up. Now it's down about 57 points, but the gains were the first time in 6 days that advances had begun to be seen. It comes after American financial regulators pledged to inject more cash into the nation's banks to prevent their collapse. According to one analyst, a gentleman named Dan Greenhouse with Miller Tabak and Company in New York, they, meaning the federal government, are going out of their way to say they're in favor of a private banking system. Seeing as to how rumors of nationalization last week did not come to pass, people are beginning to become a little bit easier insofar as believing that this will happen. The government announced that they will begin examining which banks in the United States have enough capital to survive a deeper economic slump. Banks that need more money after these so-called stress tests and can't get money from private investors will be able to tap into additional government money. Citigroup is in talks with federal officials, this was reported last night, that may result in the government holding as much as 40% of the bank's common stock. Bank executives say they'd prefer to keep the stake closer to 25%. Also, crude oil is rising as OPEC is signaling its resolve to support prices by reducing supplies. Some other news, Ford Motor Company is just announcing that they have reached a deal with the UAW regarding health costs and pension costs. This has had some spillover effect. General Motors is now up about 3%, and Ford is up about 3% as well. Back to some reinsurance news. In-play Lloyd's insurer Chaucer has announced that about 61.5% of qualifying shareholders took up their rights in the firm's £75 million share placing, leaving some 70 million shares, equivalent to about 13% of the company, to be placed, quote, with certain shareholders and other institutional investors. This offer, as we've reported, was underwritten by Numis Securities and Lloyd's TSB Corporate Markets. Shares of Chaucer were bid at about 43.75 pence, 9% above the 40 pence offer price. This puts the underwriting positions already in the black. Back at a general meeting on the 13th of February, over 94% of Chaucer's voters approved the new share issue. Some news coming from the European markets. We'll give you the rundown on the insurance markets first. The insurers are gaining on hopes of industry consolidation. This is after a British newspaper said that Resolution, the big UK insurer, is eyeing the British insurance business of Prudential. Prudential jumped 2.5%, while Legal & General, AXA, and Allianz gained between 2.5% and 10% each. The bank stocks in Europe are taking a bit of a hit. Union Bank of Switzerland tumbled about 6% to an all-time low. This is after some fallout from Friday's arrangement begun to settle in. Top executives in Zurich are meeting with a barrage of criticism now over the way they handled the American IRS probe into tax fraud. Some other news, this came out late Friday. Renaissance Re Holdings said that it has promoted Ian D. Brannigan to Chief Risk Officer. Mr. Brannigan, who will also become part of the Bermuda Reinsurers Executive Management Committee, will now be responsible for enterprise risk management practices. He has served as head of the group risk modeling effort at the company since 2005. Mr. Brannigan takes over the role from Todd Fauner. Mr. Brannigan is a friend of this company. We wish him the best. Just before we came on the air, RenRe made some more news. They said that they have extended its contract with President and CEO Neil Curry until February of 2014. Mr. Curry's contract was set to expire in February of 2010, subject to automatic one-year renewals. He is a co-founder of the company and has served as CEO since November of 2005. We've been reporting off and on about the FSA fine of Aon's business practices in some countries, specifically in Africa and Asia. This is regarding illegal payments to certain officials and other insurers to obtain business in the energy and aviation fields. Now, in a newspaper out of Nigeria, there's some information as to which countries, in fact, may have been targets of the FSA's investigation. Nigeria, Ghana, and others in 14 countries have been implicated in Aon's £7.5 million illegal earnings scandal in its overseas insurance operations between 2005 and 2007. Aon, of course, took steps in June of 2007 to notify the authorities, such as the Serious Organized Crime Agency, of suspicious payments, and the rectification that Aon embarked upon in conjunction with the FSA is being held up as a model by the FSA for other companies to follow. Until its recent divestment from Hogg Robinson, which was one of Nigeria's leading insurance brokerage companies, Aon operated in Nigeria through its affiliation to Hogg Robinson. Here's some information. Besides the two African countries, Nigeria and Ghana, FSA identified the Philippines, Burma, Bahrain, Bangladesh, Bulgaria, Indonesia, and Vietnam as other countries where Aon's weak monitoring system led to, quote, corrupt payments to overseas third parties to win or retain business. The report particularly identified some business units within Aon's aviation and energy divisions that paid overseas third parties in connection with reinsurance business transacted in high-risk jurisdictions. Marsh McLennan will pay more than $83.5 million to settle a class action suit filed by customers who were clients of the insurance brokerage arm of the company while it engaged in bid rigging and steering of insurance contracts. According to court filings in U.S. District Court in New Jersey, the award will comprise over $69 million. It will reach 200,000 defendants. Marsh Mac will pay more than $14.5 million in legal fees to the attorneys who represented the defendants. The brokerage firm settled this case with the New York Attorney General's office in early 2005 by paying an $850 million settlement. This is a consolidated lawsuit that was brought by a number of plaintiffs against a number of insurance brokers alleging collusion and racketeering. We'll now go to a word from our sponsors. The stock market remains down about 55 points, and then we'll come back with the rest of the news.